Good morning, everybody. I'm Charting Man Dan with the Chart Guys, filling in for Lori, who is under the weather. But we're going to check in on the longer term charts. And we've done this a few times this past year. And so we're going to check in on some of the patterns that we were watching that have already played out. And we're going to check in on some of the patterns that I am keeping an eye on into next year. So appreciate you joining me. We're going to go through this for about the next 20 minutes or so, and then I'm going to switch over to live stream the open for the Chart Guys members. So let's start off with the broader market. So the broader market a few months ago, again, now we're rewinding a few months in time and looking at the last time we looked at longer term patterns, and there were two scenarios that we were watching, either a cup and handle on the monthly time frame or a 3-month equilibrium. And one of the, if the bears were going to win, it was going to be a 3-month lower high, pull back into a higher low, and a potentially very boring 2024 while we tighten up significantly. That has not happened. We had the monthly EMA 12 support hold, keeping it a bull flag. The bull flag has confirmed, and we're now knocking on the door of all-time highs adjusted for dividends. So this is a potential monthly cup and handle, and there is a potential significant amount of follow-through that comes with this. There's going to be consolidation along the way. We know the fundamentals. Everybody's looking at the fundamentals as the reason to be bearish, but the charts are telling us that the bulls are in absolute complete control with uptrends on every single time frame and approaching potentially the 5th most bullish year in the history of the stock market. I'm going to have to double check that. We'll see where we end up over the next 2 weeks, but being 20% plus on the year is definitely one of the more significant bullish years in history. So we're going to keep following the trend here, and we'll see what kind of follow through this cup and handle attempt can get. We were also watching some long-term drawn-out equilibriums. I love longer-term tightening ranges or even shorter-term tightening ranges. I was talking yesterday in a live stream to members that my brain automatically is trained when I look at a chart to pick out tightening ranges and to spot equilibriums. It's almost like a pattern that is ingrained, and so my eyes seek it out because I love those patterns to trade within them and to trade when they break. And they very often give us significant follow-through. CCJ, perfect example. We were watching this CCJ monthly equilibrium that was tightening up for over a year, and we featured it multiple times in these long-term pattern videos because of how beautiful and clear it was. And you can see the result of the bull break. The bull break takes place at $29.67 for the monthly equilibrium, and here we are up at $46. So again, the beauty of a long-term tightening range is that you anticipate a significant amount of follow-through when they break. That's 57% in about 6 months of trading, which is obviously very significant returns. Another one we were watching in the opposite side of things was XLU, utilities. Again, monthly time frame, long drawn out equilibrium, higher lows and lower highs. The bear break took place at 62.91. And then over the span of less than 2 months from the point that that bear break took place, we dropped 13%, which is a very significant amount for an entire sector. We were watching NEE, an individual name in that sector, because it had a similar monthly tightening range, which makes sense being in that sector. And the bear break took place here at 68.17, and there was much more follow through from 68.17, again in about 2 months, 31% drop. So when you're looking at a longer term time frame like this, oftentimes a break will take place and the shorter term time frames may be extended. You may see a monthly equilibrium break, but the daily is not exactly where you want it to be comfortable with an entry. But we have to remind ourselves that if this move is going to play out, that, trying to pinpoint that entry doesn't necessarily matter a whole lot. Let's just see when NEE broke here, what did the daily chart look like? So that bear break took place and we did dump significantly. We dropped a bit and then we bounced and recovered back to that level, and then we rolled over significantly. So what I would suggest is, if you are watching a longer term pattern, is not getting too caught up on the shorter term time frames. Maybe you make a partial entry. Maybe you enter half of a position when the longer term level breaks, and then you wait for the other half for when you're a bit more comfortable on the shorter term time frame. But the last thing we want to do is, look at a move like CCJ and say, well, yeah, we broke bull, but I don't like the entry on the daily chart, and then missed, the next bunch of months moves to the upside. When CCJ broke bull, it had just gone pretty straight up over 2 days. So again, if I'm on the hourly chart, it's going to be hard for me to long there, going up 18% in 2 days. But again, in hindsight, that entry would have been perfectly fine in the long run. So don't get too caught up on the shorter term time frames when it's a longer term time frame that we're watching. Another one of the longer term patterns that we were watching, XLF, monthly tightening range. That has now broken bull. I believe the last time we checked in on this pattern, we were pulling back and saying, all right, we're watching for a higher low compared to 3012, and then anticipating we'll break not too long after that because we'll be very tight at that point. And since then, XLF has now broken the first resistance level and the second resistance level to get to 20-month highs and has followed through. So again, if you're playing in equilibrium, the different ways to do it, if you have conviction on the direction it's going to break, you're either buying off support and having good risk reward, putting your stop under that low, or if you have bearish conviction, you're shorting resistance and trying to position within the tightening range. If you don't have conviction and you just want to wait for the break, that's fine as well. Ideally, the pattern gets as tight as possible before the break takes place if you're waiting for the break to play. So I generally like to trade within the equilibrium to get that better risk and reward setup. But again, if I am going to trade the break, it's got to be a really tight pattern to be keeping an eye on. So next, we're going to look at patterns that we have been watching that have not broken. XLV, still in a tightening range. This is the 2-month time frame. And again, this is a pattern that is almost approaching the second year mark. So almost a 2-year pattern. We got the all-time high, low, lower high, higher low, lower high, trying for another higher low, on the verge of setting it. And the key resistance, if this pattern is going to break bull, is 136.29. So we're about 2.5% from a bull break of this equilibrium. And again, just playing in our brains, if the NASDAQ and the S&P 500 are going to be a monthly cup and handle and get follow through in all-time highs, how could that potentially play out? And one of the ways that that could potentially play out is XLV breaking this pattern bullish to new all-time highs. And some of our other laggard sectors that we're going to check in on here in just a moment, breaking bull, would also be fuel for the market to see continuation. So, you look at a name like the NASDAQ and say, but man, the 2-month time frame here, the NASDAQ's been going straight up almost all year. And, from the lows of October, we are already up 57%. How can we keep going higher? And you look at a name like XLV and say, well, this is the third most important sector in the market in terms of weighting in these ETFs. And from its low, we're up way less. It hit its low back in May of 2022. We're up 15%. So again, if we're going to see the market follow through into all-time highs, it'll have to be this continued rotation. We'll have to see IWM and ARKK and XLV. So again, just another note, if we're going to head further in all-time highs, well, look at ARKK. So ARKK, we know euphoria in the bull market, absolute despair, getting crushed. This looks like a cryptocurrency. I mean, this is the kind of cycles that crypto goes through. But look at this pattern. ARKK, we can say that the highest level that has been hit in the last year and a half plus is 53.86. We then failed that level just barely, 51.33, so we can call it a resistance zone. And here we are coming up to this zone. And where is resistance after 53.86? Where's the next level? There is nothing nearby because of how significant the dump is. And one of the things that you will often find in charts, whether it's, it can be Wyckoff accumulation or distribution, but visually what it looks like is a significant trending market in one direction, whether it's bull or bear. Then we level out and trade sideways while a base is built. And again, the analogy, I'm going to make a video specific to this trading setup, but the analogy is the scales are tilted and we're looking at the supply outweighing demand. Then they level out as we're trading sideways for a long period of time and we watch for the scales to tilt. And so why I'm watching ARKK very closely here is, again, lack of resistance if we break bull, fuel for the broader market to see continuation. But look at the previous patterns. XPEV, Chinese EV name. It did this back here on the monthly, leveled out, traded sideways, set a couple resistance levels, and we could say once we break 1310, where's resistance? Nothing's nearby. We broke 1310 and we went up 80% very quickly. Coin, cryptocurrency, same pattern. All bears level out. You get to a point where we have a double top at 116. When you clear 116, where's resistance? There's nothing nearby. After 116, we shoot up to 147, pretty much a 25% move very quickly. So find patterns that have the bottoming out and that have a level where if it breaks, it's the highest level in X period of time and a lack of resistance nearby. And ARKK is that pattern, and it's definitely worth paying attention to. In an ideal world, I would love to see a weekly bull flag right now, because that will be cup and handle psychology. Cup and handle is a continuation pattern, so this is a reversal trying to shape up, so I don't like calling it a cup and handle, but the psychology is there with a resistance level. You fail it, you bull flag, and then you break out. So watching closely, because if ARKK gets over 53.86, 72 is the first resistance level that we're looking at. So that's a longer term pattern that we're watching to try and see a bottoming out. Jets. So we got the airliner ETFs. Look at this one. This is the longest term pattern I'm watching. 3 years in the making. That's the CVID dump, lower high, higher low. Every candle is 3 months. How beautiful is this pattern? The answer is very beautiful. We held support. We got right down support. Technically, we broke it by 8 pennies. The daily chart leveled out. Look at us just balancing. Again, that balancing. Supply is massively outweighing demand for months and months and months. And then we get to support and we trade sideways for a number of days. And then the scales flip, and it's been all bull since then as one of our laggard sectors, benefiting from oil dropping and bouncing right off longer term support. This pattern is going to play out into a good bit of 2024. You know, we can bounce and go another 10% and still be within this pattern, but watch for when this one breaks, because this is the pattern for this ETF. This is, this ETF is only 8 years old. This is easily the most important pattern, and we're going to be looking for when this pattern breaks for some longer term follow through. So definitely keep an eye on Jet's 3-month equilibrium. IWM was on the verge of a long-term bear break. And as we were watching the broader market for the potential of the 3-month equilibrium, if this had broken bear, that would be a big win for the bears. We have only seen a 3-month downtrend confirm in IWM really 2 times in its history, and they were 2008 and then the CVID dump. And so bulls defended that support, 159, 160, 159, and we bounced off 161. And now we're watching on the monthly time frame a triple top of resistance. This is the resistance level. Again, this is the highest level that we've seen in a year and a half plus, and it's possible that we keep tightening here. We might set a monthly lower high and keep tightening up, but watch that resistance level, because it is the most important resistance level for IWM, and this is going to have an impact on ARKK. ARKK would likely break resistance first, but if it's going to follow through, ARKK bulls, if we break and get the go signal on ARKK, we want to be looking over our shoulder a bit and saying, come on, IWM, you got to break that triple top as well if we're going to get follow through. KWEB, Chinese ETF, monthly equilibrium. Again, it's another one that is over a year in the making. Low, high, higher low, lower high, and we're trying for a higher low. So again, if you're looking for a lower risk, higher reward entry, if you're favoring that this is going to break bull, maybe you think that the Chinese markets are going to turn around or act as laggards to a blue sky US market, you're looking for an entry soon, because again, your risk is much lower and your reward is obviously much higher. So if my setup, so if I'm looking for a monthly higher low entry, I need to zoom into the weekly to pinpoint something. And I can say, okay, this would have to be a weekly inverse head and shoulders, changing the weekly trend, if that's going to be the monthly higher low. So that's going to be a key resistance level at 2909. So what do we need? We need a weekly higher low if that's going to shape up. I zoom into the 4-hour. Well, this could be a potential 4-hour inverse head and shoulders. So the only way I'm going to get interested here is if K-Web can hold the low and then break the high of this move. 27.22 is currently that high, and that would set the weekly higher low. And then we need to break 29.09. It's one time frame, one step at a time. We get the longer term thesis. I'm looking for a monthly higher low to remain in the equilibrium. I zoom into the weekly. I say, okay, this is what would have to happen for that to shape up. I zoom into the daily and say, okay, this is what would have to shape up for the weekly time frame to shape up. And then we just watch it over the next couple of weeks. And so if I'm going to be an aggressive bull, I'm looking for an entry, ideally with 26.33 holding. Personally, I want a little bit more confidence that that level is going to hold. So I'm patiently waiting here, but I know that I'm interested in a weekly higher low for K-Web. And that's the same pattern that silver had. Silver and miners had weekly inverse head and shoulders that confirmed. There are red flags in the metals we'll talk about in just a moment, but they did see some nice follow through from that pattern. And that was my entry on weekly consolidation for that inverse head and shoulders to confirm. At this point, the metals have a bit of a red flag. So gold had a triple top at the all-time high and broke it with zero follow through. We know that whenever we break resistance or support with zero follow through, we start scouting the potential wedge. And this is a potential long-term wedge in gold. Go to the 3-month time frame. It's not game over for the bulls yet in the metals. But again, I put on my bear. I've been bullish and had some nice entries, took a little profit, and have given a good bit of profit back on this pullback by holding partial positions, looking for longer-term blue sky follow through. But I put on my bear goggles to say, okay, I don't want to be too biased. I don't want to miss, a move in the opposing direction of what I'm looking for. And this is a possible long-term rising wedge. So I have to keep an eye on this because if this breaks bear, that's a very significant bearish development in gold. What would have to happen to negate this pattern? Set a weekly higher low and recover back up to, 2100. If this is a weekly head and shoulders in gold, we're going to head down to test this uptrend support line. So the metals definitely have red flags to see that kind of blow off top and then all bear for the last 7 days in a row since we hit all-time highs. It's not a good look for the metals. So definitely significantly entering caution mode with regards to metals and miners. And last year, we're going to look in on Bitcoin. So again, as I've been saying on Bitcoin, I know everybody's looking for all-time highs. I know everybody's really pumped up and bullish, and that's absolutely a possibility. I am very open to that. But if you show me this chart and you don't tell me what it is and you don't tell me what time frame it is, I tell you that the most likely scenario with 80% confidence is that we're going to form an equilibrium, because that's the pattern that's most common in markets after significant volatility in both directions, and I see it on all time frames. It's a perfect example of what happened back in 2017. Again, this pattern is taking longer to play out, but if it's the same thing that happens last time around, we would bounce up to 50,000 or so, which is about 65% retracement, set a lower high, pull back for the higher low, and that is a possible scenario. So I'm keeping an eye out for that to potentially shape up. I'm not confident to say it's the most likely scenario. I'm very much in a 50-50 mindset, but I'm going to keep reminding everybody about it just because of how bullish crypto Twitter and everybody else is. And very few people are talking about the possibility of a longer term equilibrium because ETF and because halving and all that stuff. And I know, but I'm going to be the voice of, hey, have a game plan just in case what everybody says and expects to happen doesn't happen. Just like when everybody had the mindset, I'm going to sell over 100,000 in 2021 and we don't get there, and then you've got no game plan and you hold for a 75% drawdown. So we're going to have game plans for both scenarios, you included. All right. So I don't have much time to interact because I got to switch over here to the other account and get ready for the pre-market live stream. We got the regular live stream. We got the FOMC today, jobs numbers tomorrow. Bulls in complete control. Even if it's a bearish FOMC reaction, the bulls have some nice space to try and form a daily higher low as a result of that bearish reaction. And let's see how these longer term patterns play out. Keep an eye on the ones that have not played out yet. and review the ones that have. Appreciate you all tuning in. Hope you have a wonderful rest of your day.